morning and hello, I'm Professor Cohen. This is the Forex Supermodel Racing Review and Forex Briefing for Saturday the 11th of November 2023. Yesterday we didn't have any racing, we're having a little pause phase. We're doing a bit of business process re-engineering, which is a flash way of saying we're rethinking, and we'll let you know how we're getting on as we progress. We've done 10 weeks of day trading, and we're passing on our thoughts and sort of approach to you as we go. So this is this is day trading then, from our perspective. Now, yesterday we talked a little bit about what you need. Initially, you need you need to set up your watch lists so that you can have quick access to what's going on. There's a video on that if you want to look at the channel, and you also what else was it? Basically, you need to sort of get a very methodical approach, and that's what we're going to talk about now. Now, the starting point then is the DXY for us, the dollar index. So US dollar index. Now, if you get that up, if you get the graph of that up, or the chart, and you can have a look at what's going on. Basically, it's a sort of a basket of 6 currencies. The euro represents 57.6%, the yen 13.6%, and the pound 11.9%, which is 83.1%. So basically, those 3 currency complexes. Now, it's not the euro dollar; it's the euro complex, and the complex is made up of all the other currencies. So the euro against the dollar, the yen, the pound, the CAD, the AUD, NZD, etc. So just bear in mind, but as a rough marker, the euro dollar won't take you too far wrong. So 83% of the dollar index is represented by those 3 majors complexes. Now, what we're looking at really, if you look at the dollar index in terms of the 10-minute chart, we look at the dollar in terms of the day. So it's the daily, the 4-hour, the 1 hour, and the 10-minute. Now, if you look at fractal analysis, fractals are sort of the same but different on different charts. You'll see what we mean. So if we can talk about fractals another time, but the gist of it is that the daily chart is a sort of a fractal of the 4-hour chart and the 1 hour and the 10-minute. It's the same but different. But be aware of that, and there are other issues involved in that. So the first thing we look for is what's driving the market then, in terms of flows. So if you're looking at the dollar index, you're looking at all the usual stuff: support and resistance. Now, if the dollar index is sort of got on the 10-minute, has got a sort of a support situation there, then you know by default that euro dollar, pound, yen, all the majors are likely to be banging on the doors of resistance because you're reversing it out. So that's the first thing to know. Is the market sort of bouncing along support or resistance? And you know that when you look at the charts of the individual currency pairs that you should be seeing. So for example, if that was a dollar index, you'd probably see the euro dollar looking banging along sort of resistance at the top. So that's the first thing to notice. So what's driving the market? Is it a dollar move, or is it something else? And how do you ascertain that? Well, if you look at the dollar move, you should be seeing, we use the UST, so US Treasuries, and we use the short end. So we're not looking at the 10-year, the 5-year, or the 2-year particularly. We're looking at short end, probably 1-year Treasuries. They're the most sensitive to interest rate changes and the dollar moves, really, in our view. So you've got an inverse relationship between US Treasuries. So if the price of Treasuries is going up, you're likely to see weakening in the dollar, and vice versa. So that's verification. And the other one is the gold market. the gold market. It's got a very strong inverse relationship to the dollar. So if it's a proper dollar move, if the dollar's dropping, you should see gold charging up, and you should see US Treasury yields going up, falling, but the actual price of them going up. So you should see the graph inversely going up, basically, on the price. So you're looking at verification, really. So the dollar index is pretty useful. It tells you in a very succinct way what's going on in the market. Now then we're looking at volatility as well. What the candles like are? Is it spiking around? Is it violating support and resistance as if it's not there? And we're looking at then candle tails. We'll talk about that more tomorrow in detail. So if you've got the dollar index sort of dirging down like that, then what are these candles here? Are they green candles or are they red candles? And the significance is very important there, and we'll talk about that tomorrow. And likewise, you can look at the floors here and so on, and that tells you what's going on. So what else do we know? We know that we're using the economic calendar operationally, tactically and strategically. So we're looking at last week, we're looking at this week, and we're peeking into next week to see what's going on. Now today, following into next week, you've got the GBP. It's all going to be about GBP in terms of the economic calendar early on next week. GBP data is dominant in the market, so unless something particularly exogenous comes in, like an oil threat or something like that. But so we're looking at GBP into the next market, into next week. So that's where we are there. So we're building like a sort of a multi-layer in our mind of what's going on in the market. We're sort of reinforcing what the dollar index is telling us in terms of transmissions through FX, commodities, and the bond market. And we'll talk about this in more detail another day. But if you want more of this, drop us some comments in the box. Say it's what you like, and if not, stay quiet. And that's where we are, really. Racing is ongoing, and we'll try and sort that out as soon as. So thanks for watching, and goodbye.